I told Trudeau when he came down, I said, what would happen if we didn't do it? He said Canada would dissolve. Canada wouldn't be able to function if we didn't take their 20% of our car market. You know, they send us hundreds of thousands of cars. They make a lot of money with that. They send us a lot of other things that we don't need. We don't need their cars, and we don't need the other products.
Come and attack Ontario, you attack livelihoods of people of Ontario and Canadians. We're going to use every tool in our toolbox to defend Ontarians and Canadians across the border.
That's okay to have if you're a state. But if you're another country, we don't want to have it. We're not going to have it with European Union either. European Union, we have a trade deficit of $350 billion. They don't take our cars. They don't take our farm product. They don't take anything. And so we're not going to have it with them either.
Let's talk numbers. Ontario signed a $20 billion deal with Volkswagen to build a battery gigafactory in St. Thomas. This plant will produce enough batteries every year to power over 1 million European electric vehicles. Not a single battery is heading to the United States. Every unit is locked into EU supply chains. That's not just business as usual. It's a direct message. After Trump's tariffs, Canada stopped waiting for the US and pivoted hard to Europe. And wait until you hear how Ontario even threatened America's lights. So how did this deal come together? And why is the US completely left out? Ontario's $20 billion deal with Volkswagen is more than a headline. It's a blueprint for a new economic direction. Volkswagen is building one of North America's largest battery plants in St. Thomas, Ontario, and the plan is straightforward. Every battery produced is earmarked for the European market. American automakers are entirely shut out. This isn't a coincidence or an accident. It's a written policy under CETA and EU battery quotas. No US component allowed in the supply chain. The scale is hard to ignore. Over 3,000 people will work directly at the Gigafactory, and tens of thousands more in Ontario's mining and clean tech sectors will benefit. Nickel, lithium, and cobalt are coming straight from Ontario's own mining districts. The entire supply chain, from raw materials to finished batteries, stays Canadian. Retraining programs are already underway, redirecting laid-off auto workers from Detroit's shrinking lines to new roles serving Dusseldorf and other European hubs. This isn't just a shift in jobs, it's a full reorientation of Ontario's workforce and economy toward Europe. The factory's power source is another deliberate move. Volkswagen's plant will run on Ontario's nuclear and hydroelectric grid. This grid is clean, reliable, and, unlike in the past, completely outside US control. The US might still depend on Ontario's electricity, but it no longer sets the terms. Every battery that leaves St. Thomas is made in Canada, with no American input, no cross-border part swaps, and no shared assembly lines. The old model had auto parts crossing the border multiple times before a car rolled off the line in Detroit or Windsor. Now that loop is cut. The batteries go straight to Europe, and the economic benefits stay in Canada. For decades, Ontario's auto sector was built around Detroit, feeding American assembly lines and following US trade policy. That era is over. This gigafactory is designed for global export and European integration. The US is left on the sidelines, watching as Canada writes new rules for its future. This isn't just about competition in electric vehicles. It's a signal that Canada can bypass the US entirely when it needs to. The question is, what forced Ontario to make this move in the first place? When the Trump administration doubled tariffs on Canadian steel and aluminum to 50%, it didn't just raise costs. It broke decades of trust. Ontario saw that its biggest trading partner could flip the script overnight. Suddenly, the province faced a choice: keep waiting for US policy to stabilize or start building its own leverage. Ontario chose the second option. The impact of those tariffs wasn't just about money lost, it was about realizing how unreliable the US had become. The unpredictability, of American trade policies made long-term planning impossible. European partners, on the other hand, stepped in with 10-year supply contracts and guaranteed pricing. That's the difference. Europe offered stability, while the U.S. offered uncertainty. Ontario wasn't willing to gamble its future on whoever happened to be in the White House. Then came March 2025. Instead of just complaining, Ontario retaliated with a 25% surcharge on electricity exports to the U.S. That move cost utilities in Michigan, New York, and Minnesota $400,000 more every day and put 1.5 million American homes and businesses at risk of higher bills and even blackouts. Premier Doug Ford called it self-defense. The message was clear. If the U.S. wants to weaponize tariffs, Ontario can weaponize its resources too. The old energy partnership that kept the lights on in the Midwest and Northeast, suddenly it was hanging by a thread. The electric vehicle market felt the shock as well. Belgium's Umicore paused a $1.5 billion plant in Loyalist, Ontario, sending the investment to Europe instead. The reason? The looming threat of 25% U.S. auto tariffs, which would have raised the price of Canadian-made EVs by $3,000 to $5,000 per vehicle. Companies didn't want to risk that kind of uncertainty. Meanwhile, Europe locked in deals for entire battery supply chains, from Ontario's mines to its factories, leaving U.S. automakers on the outside. Ontario's response is what economists call strategic autonomy. That means building long-term supply deals and partnerships that don't depend on the shifting winds of U.S. politics. The St. Thomas plant is the centerpiece of that plan. It's not just about making batteries, it's about making sure Canada can reach global markets without waiting for a green light from Washington. If Ontario ever pulled the plug entirely on power exports, states like Michigan and New York could face blackouts in peak demand. The Canadian Chamber of Commerce says this could spiral into a $50 billion trade war by 2026. But Ontario isn't scrambling to avoid that scenario. It's getting ready for it. That's the real difference now. Ontario didn't just react, it built a position where it could set its own terms. And while American states are still hoping for a return to the old days, Ontario has already moved on. Ontario's approach isn't just about walking away from old partnerships. It's about building leverage with a smarter play. The province decided to offer what foreign investors crave most: stability. While Michigan's auto sector has shrunk and its retraining efforts shift with every election, Ontario launched targeted retraining programs for laid-off auto workers and set up technical college partnerships with companies like Volkswagen. This isn't a temporary fix. It's a long-term plan to keep skills and jobs local, and it's working. The clean energy grid is a major selling point. Ontario's electricity mix is 60% nuclear, 25% hydroelectric, and 15% renewables. That's not just a statistic. It means a reliable, low-carbon grid with real-world contracts like the Bruce Power expansion backing it up. Utilities in Ontario pay about 30% less per kilowatt hour than their counterparts in places like Ohio or Pennsylvania. When the U.S. grid buckles under extreme weather, Ontario's grid stays online. That's why Norway's battery company Morrow picked Ontario over Texas for its $1.2 billion plant. European investors see the difference. They want long-term security, and Ontario delivers. On the financial side, Ontario's incentives are clear and locked in. The St. Thomas Volkswagen plant received a $700 million provincial grant, matched by federal funds, all guaranteed for 10 years. Compare that to the US, where the biggest incentives, like the Inflation Reduction Act's EV credits, can be tied up in court or disappear after an election. European investors and automakers have noticed. Dutch pension funds are now financing Ontario's mining projects, skipping American partners. German car companies are setting up entire supply chains in province, from lithium processing to battery recycling, because they know Ontario's rules won't change overnight. Umicore's $2.7 billion cathode plant in Kingston is a clear example, funded by EU capital, built to serve European factories first. Ontario isn't just collecting factories, it's building a full battery ecosystem. Lithium comes out of the north, gets refined in Sudbury, and turned into battery cells in St. Thomas. Every step happens inside Ontario, cutting out US middlemen and dodging tariffs. For European car makers, it's a straightforward calculation, cheaper, more reliable, and no American uncertainty. Even aluminum exports, once tied to the US, now move tariff-free to Europe under CETA. The pattern is obvious. Ontario is positioning itself as a stable, independent partner for the next generation of industry. Investors see predictability, not political risk. This isn't some protectionist move. It's a calculated response to years of US unpredictability. Ontario is showing what it looks like when a region takes control of its own economic future. The effects of that decision are starting to show, and the next chapter is already unfolding. Canada's pivot to Europe is not just a reaction, it's a strategy that's working. The $20 billion Volkswagen battery plant is only the beginning. Dutch pension funds now finance Ontario mining projects. Airbus shifted its A220 wing production to Quebec, citing political risk in Alabama. European investors get stable partners. The US watches from the sidelines. The US thought tariffs would strengthen its hand. Instead, Ontario's nuclear-powered factories, clear tax incentives, and skilled workforce show that strategic autonomy pays off. And don't forget the electricity angle. Grid simulations warn New York and Michigan could face blackouts within days if Ontario ever cuts exports. Can the US respond, or is Canada's pivot to Europe here to stay? Let me know what you think in the comments.